welcome on stage. Maybe to kick off the discussion, let's start with a round of introduction. So, can you introduce yourself and your company, and what do you do? So, maybe Dirk, can you start?
Yeah, so Dirk Meuleman, CEO of Phenix Capital Group. We're an investment consulting firm helping asset owners across the world, institutional ones, allocate more capital towards impact. So we focus on the market returning part of the market, and we help them screen the universe, set their mandates, design their portfolio, and create and run the portfolios for them.
Okay, so how long for how long have you been created?
About 10 years.
All right, how many people are?
29 at the moment.
Victorien, same questions. So for those who don't know Swen, can you explain who you are and what do you do at Swen?
I'm Victorien Salle, working at Swen Capital Partners as a principal. Swen is an investment platform, investing mainly in the private equity and infrastructure industry. We invest through several strategies. We like an investment platform, and we invest in infrastructure, private equity, through impact funds, in venture capital, and also leverage buyout.
And before that, I think you worked at a family office, right?
Yeah, so it's been a year I work at Swen, and before that I was working for family offices, managing the wealth of 10 French families. Yeah, for almost 6 years, and I start my career at BNP Paribas in the leverage finance industry.
So it's great because you both have views on LPs, so asset owners, and their expectation on sustainable finance, on impact, but also GPs, right? Because you analyze them as an investor. You're also, well, you represent LP, and you can represent also, you are an LP, right? Because you do invest in impact funds. So from this point of view, how do you perceive this, growing market? I mean, it's been tremendous growth in the past few years. Can you comment on, how big the market has become in terms of impact investing in the past few days? I don't know, few years, sorry.
Yeah, that's probably for me. I started tracking the size of the impact market about 8 years ago. When we were looking at Phenix, we want to 100% focus on doing impact investing as advisory. And at that time, there were about 180 impact funds globally. At the moment, there are almost 2,500 impact funds, and then you have the concessionary part of the market on top of that. Yeah, so the total market's a little bit over $1 trillion. So it's grown tremendously, very steady year over year. It keeps growing.
So, but in number, but also in size, no? Right, the average size is.
Yeah, the size is also moving up quite fast. So in the last about 2 years ago, average private equity or venture capital fund size in impact was about 125 million. Now it's north of 200 million. So it's around 250, which is logical because it's the third generation of the fund. You raise a 20 million fund, you raise a 100 million fund. If that goes well, you raise a 250 million fund.
And you also have this mega fund in LBO above 1 billion, right? Which is quite new.
And in the infrastructure space, in the microfinance space, you have quite sizable funds.
All right. Do you see the same evolution at Swen?
Yeah, and especially at Swen, we developed 2 impact strategies. One in venture capital, the other one in infrastructure. And the one in infrastructure, we raised the hard cap, so the final size of the fund, and this one is in infrastructure, green energy, biogas, methanization. So we saw a quick acceleration with these topics in the past few years. So we start with a 150 million fund. Now the fund is almost 500 million. So it's quite new, and the first one was back in 2017-18, and now we are raising the second generation, and it's not double, it's like triple or
So that's the offering, the fund offering. What about the demand, asset owners? So who invests in this type of funds? Why is it growing so much among LPs? And what type of LPs do you see having an interest in investing in this type of funds? Because Kevin mentioned that we're not here to just preach to the core and having a very niche market of convinced investors. We're here to expand and going mainstream. So is it this mainstreamization of the market? Do you see that happening, Dirk?
Yeah, especially since COVID, the lockdowns where we all realized whatever we do affects the people around us. We saw that being a tremendous move, an impetus for impact investing, really driving that mainstreaming. To give you a sense, in the Netherlands, more than 50% of the pension funds have an active impact allocation. That's not the case in all countries yet, but that gives you a clear sense of the direction, because 6 years ago, that was the first one. So now it's more than 100 pension funds.
And if you look at the size of the pension fund in the Netherlands, that's a big
and it's a big
move.
Part of the market. So, and we see that across Europe moving. So we see in impact, the pension funds, the insurance companies, they're really leading the thought leadership, and they allocate with the big size. And then the family offices are very active, and more also just the retail banks.
So, okay, so family offices, pensions, insurance companies as well? Okay, do you see that also, Swen? You're an LP, but you also have LPs, right? Because you're fund of funds. So who are your LPs and why are they interested in this type of investment?
Our main LPs are French insurance companies.
Okay.
They are also in the area of our shareholders. So they give us the opportunity to manage their assets, private assets allocation towards private equity and infra. And they're seeking to invest more in impact, but it's quite complicated to mix the performances and also the impact, because they are institutional investors and they want to have good returns on their investment. They have their own board, their own shareholders, and they want to put money on this kind of strategy, but they don't want to miss the performances. So it's quite difficult for them to pick up the right fund and the right strategies. So you have to be very sophisticated to select good strategies.
Okay, we'll come back to this sophistication, but as you mentioned, performance and this debate or discussion that LPs have internally on is it performing well. So what exactly are the terms of the debate? Because what do they mean by performing well? You mentioned here that they have an allocation to impact. What does it mean? And how do they reason?
Yeah, so I think part of this debate has to do with where impact originated in different areas of the world. Because in the US, impact investing comes out of the philanthropy space. And in Europe, impact investment comes much more out of the pension funds, the German-speaking insurers, reinsurers. So they have a very different view on concessionary returns on that performance. I was recently talking with the board of one of the largest pension funds in Europe or in the world, and they had done an analysis and they have looked at their investment returns over the last 10 years and analyzed if we had been more strict in restraining the portfolio, in putting more ESG measures in place, being more focused on impact, how would that have affected our returns? And the returns would have been better. Okay. Less risk, better returns. So yeah, that discussion in that, I think there's always impact projects and impact things that where you're not able to build a market rate return case. That goes to a different part of the market, but within every asset class, within every topic, I think it is possible to create market rate returning portfolios.
Yeah, because impact or sustainability is not an asset class, right? So you can have bad managers, good managers, you can have very different strategies. There is no correlation between, I don't know, VC, LBO, infra, as you mentioned. So do you monitor this, diversity of performance of so-called 2000 impact funds?
We track as much as we can. Not every fund shares their performance, and some do it under NDA. But we track for hundreds of impact funds. We track the performance and how that looks versus the traditional market. And it differs a bit per asset class, and it differs per time period. But all in all, I think the performance of the impact funds are much better than people often think.
Okay. Same goes with you. As an LP, do you monitor, the results? Are you happy with your investments in impact?
Yeah, definitely we are happy with it. Sometimes it's more challenging depending on the strategies, especially on venture capital recently. But it's quite challenging also to find the right manager, the right GP to invest in this kind of area, because it's pretty new. But we definitely convinced that in the near future it will foster premium and higher return, and also not only financial return but also extra financial return. And I think in the near future more and more LPs and institutional companies will try to manage not only the financial performance but also the extra one. But it will need some work with the regulator, I think.
Yeah, I think it's also good to realize in some of the performance studies that have been done, especially coming out of the US, they have put together the parts of the funds that are looking to get a return and the funds that are only looking to return their principal capital. So if you put those two groups together and then you calculate a performance benchmark and compare that versus an only return-seeking universe, obviously you're going to find underperformance. And yeah, that's happened in a couple of the big performance in the impact studies.
Personal advice, don't read all these papers on performance and impact or ESG. It's usually very boring and always the same. Okay, so you're just creating a group of ESG or impact or sustainability fund that has nothing in common, and then you compare it to another group that has nothing in common, and you find not interesting conclusion out of that, obviously. Yes,
you have to compare, like for example, a small cap buyout fund which do impact with another one that don't do impact, and you can compare the two strategies because they invest of the same kind of companies, the same size, the same enterprise values, and the same way to create value. Just with the impact fund, another way and another network to create value is impact, and you can compare if the impact one will be better or not.
Okay, so in order to achieve that and this level of discussion on actual impacts, we need sophisticated LPs. You mentioned this term, and also Kevin before. So do you see LPs getting more sophisticated, meaning going beyond, tick the box, I want an impact fund, okay, let's find one, and we are done. Usually it's climate, that's okay. Can we go beyond that and having, working on intentionality of the LP? What type of impacts do they want to achieve? Do you work with LPs on that, Dirk?
Yeah, and sophistication is moving up quite rapidly, because impact is mainstreaming quite rapidly. So often you get now a combination between specialized impact people, and that can be from our team, can be from the bank or pension fund themselves, and combining that with the asset class specialist portfolio manager that runs the fund not only through the normal due diligence, but then on top of that you get the full impact due diligence. And I think LPs are also getting demanding more from the managers. Are you just investing thematically, or are you really having a proactive approach? Do you have a theory of change in place? How do you link that to your performance fees? What are the KPIs you've set? The market's just getting very quickly developing in that area.
So there is an additional due diligence, right? Yeah. Specifically focused on how do they create impact?
Yeah.
Okay. Do you conduct this type of due diligence and who does that within the team?
Yes. I will take the LP side to try to illustrate what Dirk said. But in our firm, we have 10 people working at the whole ESG team. So their input ESG work within all our due diligence and presentation of new investment. So they are here to put the ESG at the center as a backbone of our strategy. And we are approximately 100 people at Swen, so it's more.
Okay, so 10% of the team can be labeled related to ESG or sustainable finance.
Half is for the impact strategies, and the other half is for the multi-strategy, so the fund of fund. And as an LPs, we are more and more. We try to be more and more sophisticated because it's kind of a requirement from our LP on one hand, and on the other hand, it's also kind of our mission as a management company. And we try to improve our ESG process. For example, recently for new funds, we put veto rights for the ESG team. So during the committee, they can just say no for this investment because there's too many red flags, and so we cannot go in this investment. Yeah.
And did they do so? Did they exercise their veto rights so far?
I don't see it now because we work really closely with them on the analysis before presenting. So we try
you censure yourself
before
presenting
but once we find with the ESG team red flags on an investment in secondary, because there's oil and gas company in a portfolio, and so we can't invest in oil and gas. We put prohibited investment policies for fossil energies. So when we discover that, we put the red flag and we drop the case, because we try to don't work too much if there's a big issue and very easy to identify. But they have a veto right. Yeah.
Okay, it means that the investment team, so you have integrated this mindset and already apply it directly from the sourcing of the deal, right?
Yeah, we try to implement in the beginning of our diligence and all the reflection. For example, the ESG team are part of our deal flow meetings, so they are perfectly aware on the deals we looked at.
Okay, so here we have an example of a kind of very sophisticated LP, let's say. It's not the representative of the majority of probably the average LP in Europe. So what is your advice for LPs that at the moment only have tick the box exercise, so I want an impact fund? Is it okay? What is your advice to go for beyond that and working on their intentionality?
So some of the European fund of funds and pension funds, they've kind of took a shortcut on that decision, and they say if it's on our impact fund database, it qualifies for their impact portfolio. That's a quick shortcut. Others, they use our whole impact due diligence framework we run for them. We look at 33 different characteristics. We benchmark the funds versus best practice in the individual asset class, and that can be from how have you aligned your carried interest to your impact KPIs, or how do you report, and what's the diversity of your management team? Do you offset the carbon footprint of all your portfolio companies? Those are a couple of examples we look at. So we have a best practices library for every asset class. We benchmark every single fund, how they score versus their peers, how they score versus best practice, and that helps our impact specialists, because this really becomes then a specialist role, engage with the managers to help them improve, show them what they can do better. We have minimum standards. Funds score 0 to 66, so they need a score 33 to qualify for most of our portfolios. And then we work with some of our clients to see, okay, what their specific requirements are. Yeah, some of our clients say if it qualifies for impact portfolio, it also has to be Article 9, or they say the investment committee needs to be gender diverse, or there needs to be real impact expertise in the investment committee, showcased through previous work experience, which can veto companies. So that differs a bit for individual clients how they do that.
All right. Let's deep dive maybe into some sub-asset classes or strategies of the impact or sustainability landscape. Venture capital. We know that in many countries, France is a good example, institutional investors invest very little in venture capital, okay? Because of many, maybe some prejudice or cliches that it's not performing well, it's too complicated, it's too small, it's too risky, etc., etc. So with the new impact glasses that we are, fostering, and is it a good way, for institutional investors to reconsider venture capital as an asset class and to invest much more in this area? Do you feel the same? I don't know, Dirk or Victorien.
It's been difficult in the recent years and months in the venture capital industry, especially in new technology. And I think to answer your questions, it's not about venture capital in general. When you do impact in venture capital, you can seduce new LPs and have new LPs joining your cause if you put topics, thematics. Yeah. For example, at Swen, we have an impact strategy in venture capital, and it's a focus on preservation and regeneration of oceans. So it's kind of new strategies, the blue economy, and it's quite appealing for LPs, but not only French LPs. Yeah. We saw LPs abroad, in the US, in all over Europe, that are really find appealing this kind of strategy because it's real intentionality about what we want to do. So thematics, I think it's a way to reconciliate institutional investor with venture capital, and venture capital can be tough, but it's more risk than buyout, but higher return. So
okay, so you present the thematic, and it attracts the asset owners. And by the way, it's venture capital, but that's a second step. All right. Do you see the same?
Yeah, a lot of our clients they have an asset class, and then they're looking, okay, how do we make this asset class more impactful? So and if it's a private equity portfolio, and you want to make it more impactful, you move a little bit from buyout to growth, and from growth a little bit more to venture. So because more of the capital actually goes into the companies, the investors actually have more impact in those deals. And on the other hand, we see them make the switch to overemphasize a little bit emerging markets. So they look at, okay, maybe it's 25% emerging market, but because it's impact, let's tilt that to 30% or 33% emerging market.
Okay, so that's, and to come back to your point, Victorien, why do we find so many thematic funds in venture capital and we don't find them in other areas, maybe LBO? Is it more difficult to create a bigger or different thematic funds in other asset classes?
I think when you get to profitable companies, they are more established, they are on a more established also sector, and when you are in venture capital, it's more young companies, and they can implement only a thematics, a way they want to improve the society and also climate or ocean, and we saw more and more thematics of venture capital fundraising, and it's quite interesting in terms of diversification also.
Okay. And obviously, these impactful companies on their cap table, oh, so there's some echo here, they have impact funds investing in them. Sorry, there is an echo. Yeah. Oh. That's very loud. Better now? Yeah? Yeah, looks good. Okay, oh, we have just 1 more minute. So last question was, yes, you have also non-impact investors investing in impact companies. So do they collaborate? You know, these impact and non-impact investors, do they compete with the same assets? Is there an angle, a specific angle when you are in impact funds, when you address an impact companies, do you have you know, an advantage? I don't know if you have a view on that.
Yeah, I kind of, one of the things I look at the due diligence, and one of the things I like with all private equity firms, all the impact funds, I like it when part of the LP base is there for the impact, and part of the LP base is there just for the cold returns. If you have both sides represented in the LPs of a fund or in the cap table of a company, I think you're getting, yeah, the best of both worlds.
Okay, so there's indeed collaboration. It's not a niche market, you know, impact fund between themselves against the world. It's collaborative. All right, I will end with this word, collaboration, as I began. And, oh, sorry. Okay, we have a 5-minute break before the reverse pitch session. So please don't go far away and please upload our 2 panelists. Thank you.